And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It is time for the market forecast Monday, November the 21st. My name is John Hoagland. Thanks for trusting me with your time. As always, I can't tell you how much I appreciate it. As always, our focus on the forecast is context, risk management, and patience. We've got a short week this week. It is the Thanksgiving holiday week here in the U.S. Monday, Tuesday, Wednesday will be full trading days. We will also be having the usual events like forecast, recap, coachings, make Hoag money, and all those at the regular times. I'm not sure about the coach's playbook tomorrow. We'll find out soon enough. And so what are we looking at this week? Well, we're probably going to be looking at some limited participation, especially as the week goes on. There won't be any forecasts or anything on Thursday, of course. Neither will there be on Friday. I'm suggesting you just take a little time off. You get a 4-day weekend that way, and sometimes it's a good idea to just take a little bit of time away. We all have to do that. As far as economic numbers this morning, nothing major. We do have a packed day, however, on Wednesday. Tuesday, we do have some talking Feds. We have Meester. I think we also have George and Bullard. Meester tomorrow at 9 a.m., 12:15 George, 12:45 Bullard. Those are, of course, tomorrow, not today. Not looking at anything major. We do, however, Tuesday morning, something we don't usually see, something that's not usually on a lot of economic calendars, is an announcement from the OECD, the Organization for Economic Cooperation and Development. There's, about 38 countries get together and try and figure out how things are going. In September, they released an information that said the U.S. is facing or falling into recession. So Tuesday morning, tomorrow morning, that information is going to come out. And, we don't know if it's going to be impactful or not, if it's going to be good or bad. We just have to wait and see. Just something I'll be checking out tomorrow morning as I sit down to trade. Because, again, tomorrow morning we don't have a lot of economic information. Richmond Fed Manufacturing Index, the money supply at the end of the day. Wednesday is the day we're all going to be really need to be paying attention, because 7:30 on Wednesday, we have durable goods orders, jobless claims, as usual, would be normally on Thursday, but it's packed onto Wednesday due to the holiday. We have PMI composite flash, we have new home sales, we have consumer sentiment, we have EIA petroleum status report, we have the natural gas report, and at 1 p.m. on Wednesday, we have the FOMC minute release. So Wednesday is really where all the economic data is packed into this week. But again, we're going to be a little bit suspect of participation as the week goes on, the shortened week. Earnings season has pretty much largely come to an end, so we don't really have any important earnings to think about this week or for the foreseeable future. So we've got the VIX up this morning. We got just about everything on my quote board showing red. And we've got the VIX up 3%, just under 3% at 23.87 last I checked. The dollar index up 0.75% at 107.76, and the yield on the 10-year up just slightly at 3.79%. So we're going to you take a look at the charts, see what we see, and we'll hopefully have a good trading day. Now, we do have group coaching today. I've got a lot of emailed in questions. I got a lot of things to prepare for. It's going to be a busy group coaching session, and I am really looking forward to it. And then, of course, right after that, Make Hogue Money, followed by the recap. So busy day for me today, and we'll see what these markets have to show us. Good morning, Theo. First in the room, you win the prize. Terry King, Caprice, the Rooster. Good morning, Scott Saw, Nasdaq, Dimitar, Jason Lewis, Shaw Cunningham. Good to see you. Serenity Trader, Dan, Clarence, Bill, JST Wave, Respect Trading. Good to see you. Don't know that I've seen that name before. Welcome to the Market Forecast. Denise, good morning. Charles March, JM, Sarah Hall, as always. Good morning. Prayers and love to you as well. Danny, always a great day to be alive. Eric, be alive. Eric Hill, Brody, Vince, good morning. Three Lions, Sarah, Caesar, Dimitar, Anissa, good morning. Rick, my brother, love you. Columbus, Joe, good morning. Alejandro, good morning from France. Good morning, Respect Trading. Marcelo, good morning. And Haggle Matters, good morning. So, we've got, not that much to really talk about this morning as far as economic numbers are concerned. And these markets, are going to be offering opportunities. And I just have to remind myself that the last word in the trilogy that we say every day, and that's context, risk management, and patience, is patience. And it's probably the most important word, especially when I'm looking at a market that I'm, just kind of seeing what I'm seeing and not really confident in any direction in some of these markets. Especially the equities. I think, those have kind of fallen somewhat range bound. So, I'm going to resolve myself this morning that I'm probably going to miss a couple of trades and that I'm going to try really hard not to go looking for trades. I'm going to try and stay really patient today and wait for the market to give me an opportunity with severe risk management. And an opportunity for a larger profit. I'm looking for asymmetric opportunities, and I'm probably not even going to be looking for them. I'm going to wait until they come to me and say, this is a pretty cheap opportunity here. What are you doing? And usually those are some of the quieter ideas that come to me. A lot of the impulses are really loud. They're yelling at you. They're saying, "Get into this. Get into this." And some of the better opportunities are the ones that say, this looks interesting. So be patient. It is a short week this week. We realize that, and we are looking forward to your success. So please feel free to join me for group coaching, for Make Hogue Money, for the recap, for everything this week. And we'll see if we can't put together a good trading week. Let's get into the charts now. Starting with the E-mini S&Ps on the daily chart. Okay. Well, about a week and a half ago, we started saying the upside auction was tiring. It was running out of juice. And instead of just turning around and heading the opposite direction, it's created an area of balance. Now, when I look at this daily chart, it's a little bigger here, I'm seeing a lot of lack of confidence, a lot of lack of direction. We've got long shadows on short little bodies on these these candles. So I don't see that there's a whole lot of confidence in either direction. We've got last week's high, we've got last week's low, and we're relatively centrally located. So the market is kind of opening in short time frame control. There's very little confidence. Are we starting to see a possible little bull flag up here? Volume has, by and large, been relatively low. We lost 12,000 estimated in open interest on Friday alone. It's a holiday week. No releases today. The market's in balance. It's going to be short time frame controlled unless something unusual enters the marketplace. Somebody says something happens. I'm going to be really just patient looking for my opportunities. Here's the daily. Now, here's that when we started noticing that the market was probably suffering, that the upside auction was struggling a little bit, the fact that we closed on the low of this day, that we looked above and rejected on this day and small there. We had a push to the downside to clean up a little unfinished business down here in the form of this naked point of control. And then the market turned higher, and we're relatively centrally located inside this area of balance. What's it look for us for today? Okay, we do have and did have some overnight inventory to the short side. Well, already here on the 7 o'clock bar, we're seeing some of those overnight weaker hands, less lower cash, if you will, weaker hands traders already adjusting inventory back towards where the market opened last night, which is right up here. Got a little bit too short time frame. The short time frame, weaker hands traders already pushing price back to that level. What is it doing to us overall? It is putting us right in the middle of the value area from yesterday, and that's going to really, and it kind of suggests to me that better trade locations are likely as the day goes on, probably not first thing. Now, when I say that, the market loves to make a liar out of me, but we'll have to see what happens. So looking for a kind of a balanced day, looking for the market to establish an early range. And then I'm going to be looking for the opportunities at the extremes of those ranges to limit risk. Okay, are we showing acceptance of value? Well, we're back inside it now and relatively centrally located. So be patient. Better trade locations are likely to come as the day goes on. Let's take a look at crude oil now. So we have our head and shoulders with a really decent move or attempt to reach the measured move that would put in our weekly kickoff low here, 75.20. We've been largely one-time framing for a couple of sessions after the breakout below the neckline of this head and shoulders. And looking like, it is attempting to continue now. We're in rollover. If we remember, on Thursday, we changed to the January 2023 contract, and the volume is just starting to really fill in. Today is expiration of the December contract. Don't expect anything bizarre really to happen, but now we're going to be able to see, as of tomorrow and the days forward, more clear information as far as volume and open interest is concerned. When I'm looking at the open interest, the December contract evaporated 23,500 contracts. Now, that's the estimate, but that's expiration. So when we think about it, we probably even added some open interest in future months because of we lost 12, 24 of it was the front month. So did we add 12,000 contracts in the future months, the ones that we're still going to be trading? That's the way it looks. So the downside auction is appearing to still be healthy to the downside via open interest. Volume's a little bit more difficult to read, but we did see a pullback off the low from last week that put in the low, really. So the market got a little bit too short here. We had a pretty decent move to the downside. We had some short covering and some potential for new longs at this level. So not only was this an event where we got some profit taking, we maybe put in some new longs on this move to the upside. Well, where are we now? We're in range, right at the high of value. Overnight inventory has us short, but all of this consolidation last night probably did well just to kind of reconcile that overnight inventory. So we're not really opening with any amount of inventory with which to deal with. Are we going to remain in value? Are we going to reject value? There's the potential for repair of the gap from Thursday to Friday. We've got a naked point of control right through that gap and another one just above that. I don't think it would be too difficult for this market to return or to fall into repair, to come up and check this naked point of control up here. But again, that's going to require rejection of Friday's value. The overall, of course, we know that the medium time frame is certainly to the short side, and again, we're still looking for the continuation and the final check of the destination of the measured move from our head and shoulders. Probably not helping that much here in the crude oil. Doesn't help that we're opening relatively close to value and inside range from yesterday. I should say Friday. Now to the NASDAQ. Low volume, lower open interest, losing 1,400, I should say, in the action on Friday. Nothing that tremendous. Again, seeing that the auction to the upside was suffering or failing or aging or whatever you want to call it, this pull than anything else. Now, again, remember we're in a short week, we're in a holiday week. Participation is going to be a little less likely. And, we've got some range-bound short time frame control going on in these markets. Here's the 30. Overnight inventory short, already reconciling back inside value. Last week's low, last week's high, weekly kickoff levels outside of those. I'm looking to just try and stay patient. The most important this week and any week is to make sure that I'm available and able to trade next week and tomorrow and the day after that and the day after that and the week after that and the month after that. Don't get beat up ever, if you will. Take a look at gold now. Gold has also shown signs of a suffering upside auction. Now we're starting to show one-time framing activity in the opposite direction. The dollar has firmed up again this morning. We have some other time framing activity here on the daily. We got 1, 2, 3 straight days of overlapping to lower ranges, but it's killing our volume. We lost 2,200 in open interest on Friday. So volume and open interest are suffering on the way back down. Is this going to end up presenting itself as a bull flag? Because I'm not seeing huge confidence in volume and open interest on this pullback to the downside. This auction to the downside is seeking new business. It needs new sellers to come in and continue this market to the downside. It did not see them on Friday. It's attempting to continue this to the downside today. Overnight inventory short. Already seeing some adjustment, but still maintaining the gap. So we have gap rules here. Overnight inventory is short. They've been somewhat reconciled. If we can't close this gap, it says that we are supposed to be trading in the direction of the gap. Those are the gap rules. Can't close the gap relatively early. Look for strength to sell. And that strength can come anywhere. It can come here. It can come back inside. Last week's range, we got value low from Friday, point of control from Friday, and settlement very tightly packed here. This is kind of a target-rich environment. A lot of eyeballs are going to be looking at this. And it also looks like a nice spot to throw a couple of worms in the water to see if we can find some fish. All right, now to the euro. Very similar, of course, to gold, very attached to the U.S. dollar. Weak volume, again, just volume dying. Just nothing. Now, are we getting close to rollover? No, not necessarily just yet. Another week or two, we can start thinking about rollover for treasuries, equities, and the currencies. So the fact that this thing is just killing volume isn't all that impressive to the downside. Again, it's going to take new business. The dollar, again, is strong today. this is one of the markets that were outside of last week's range, so I'm finding that to be very interesting. And we've got huge gaps. Another big gap. Here's the 30. So we are opening in a previous gap with a gap. We've got naked points of control inside the gap. It's a kind of a double gap here, and another one down here. Weekly kickoff low, just pretty close to this naked point of control here. So opening with a gap in a gap. All right, if we can't close the day session gap to Friday, of course, that gap rule still remains. Got to keep your eye on the U.S. dollar here. And we got to see if we can't check this naked point of control, which goes right through this gap and a previous gap. Challenging, right? These markets are a little bit challenging, and I'm trying not to feel the pressure to have a huge performance this week. Just make a little bit of money and then enjoy the 4-day weekend. The 10-year, a little upside digestion we've got going here. The market seems to be waiting for new information, and it may get some of that information on Wednesday when they release the FOMC minutes. What they've said in there and what they haven't said that's in there, we don't know. The market seems to be somewhat waiting for them. We lost 25,000 in open interest on Friday, which to me is relatively inert. Volume has been dropping as we've been staying in here. We're using up our ability to facilitate trade here. Once we break out of this area of balance, we may see some better opportunities. But again, short time frame control inside last week's high and low, by and large. And that may also be exacerbated by the fact that it is a short week and a lot of bigger traders are probably positioned and hedged for not really doing much this week. Whoops. Take a look at the 30 on that. So here we go. Overnight inventory. We opened up here. Well, we opened here, long, short, flat, inside value, short time frame controlled. Be patient. Look for opportunities as the day goes on. And let's take a look at natural gas. A fascinating market. All right, so just really remaining somewhat range bound. I don't think that we have had the opportunity yet to close the gap that created the island top here, but we're not really seeing a lot of momentum to the downside. It's going to be difficult for this market to, I think, continue lower as cold as it's been. Here's the 30. So here's that gap that creates our island top. There's our island top. Starting to see some continuation here. I don't necessarily want to fight this move to the upside because it's kind of a breakout above an area of balance. It's really right on it. So I'm looking at last week's high as the upper extreme of balance. If we continue to accept above it, I would think that the market would continue to move higher and close this gap and close this as the point of control from the day that created the island top. That will negate the island top and we'll go from there. But no gap, but we've opened and rejected price and range from Friday. Therefore, of course, rejecting value. I don't want to step in front of this, ladies and gentlemen. Nasdaq, an island top. So overall, price should be coming up to the island top. These are day session ranges. The island top is when there is a gap to a day session range and then a gap away from a day session range. It can be a powerful reversal signal, which for a couple of days it was, and now we've fallen into balance. So if we can't fall into balance, if we can't move lower, eventually we'll come up and we'll recheck this. So we'll close this gap, check to this point of control if we're going to take out the island top. All right, Gnostic? Steven, I don't know why it's blurry on your end. It shouldn't be. Let me know if it's a continuing problem or a problem for many. Brody, let's get that link for you and for all of you. Make Hogue Money is at 2 o'clock today. If you're not familiar with it, it's an opportunity for us to take a look at the markets, for you guys to come up with trade ideas, and we're going to trade those in one of my accounts, and you're going to try and make me money. There's the link for today's Make Hogue Money. That's at 2 Central, about an hour, a half an hour after the group coaching session, which should be a busy session. You're welcome, Brody. And that's for anybody who wants to participate in the Zoom meeting. You'll be able to watch Make Hogue Money on Zoom, on YouTube, but you won't be able to vote or have your voice. So you will want to go into the Zoom meeting if you want to be part of the decision-making process. I keep an eye on both chats from YouTube and from Zoom to see what kind of conversation is going on. And we will see what happens. All right. Okay, so relatively brief, succinct, and to the point market forecast this morning. Lower participation. Be careful. Look for opportunities as the day goes on. And let's get through these 3 days and take a little bit of time off the end of the week so we can all give thanks to the opportunities we have, our loved ones, and the freedoms that we have. I think that's about all I've got here this morning. So let's take our deep breath. Stay humble, grateful, and creative in your trading today. Make sure you stay centered. Your ball of clay's got to be centered if you're going to make something beautiful with it. So get out there and profit. I will see you in the proverbial trading pit here in just a few minutes. And see you for group coaching, Make Hogue Money, and then at the end of the day for the market recap. Looking forward to seeing you there. Have a great, great trading day, even if that means a lot of sitting on your hands. All right? Stay out of trouble. Feel like RoboCop. Stay out of trouble. And see if you can't turn some profits today. Have a great trading day. We'll see you later.